have Mr. Venu Nair, the MD and CEO at Shoppers Stop, joining us on the show. The company has reported a very strong set of numbers. If you look at the top line, that has jumped up almost 3 times, revenue coming closer to 950 crores, and the company has reported a profit versus a loss last year. Mr. Nair, hi, good afternoon. Thank you so much for making time and speaking with us. The biggest question of it all is this kind of growth rate and turnaround sustainable for the coming quarters or not? What's the demand momentum on the ground looking like?
Good afternoon, and thank you for having me on the channel. We've had a very strong set of numbers, and we are delighted with the performance that we've had. I think worth calling out that this has been the best ever performance both on sales and profits in the first quarter of any financial year that we've had. The comparatives, of course, not necessarily valid because last year quarter one was quite heavily impacted by COVID. But even if we were to compare against pre-COVID, the numbers have been very strong. And even as we move forward, the momentum that we've had in the first quarter has carried on into the second quarter. And as we speak, the month of July has also been very strong. So to that extent, we are fairly confident about the momentum continuing. We actually expect that this year, this financial year, will probably be one of the best years that retail would have. And that's clearly what the trends are indicating at the moment.
Mr. Nair, when you say it's going to be one of the best years, what kind of growth outlook should we expect? And in terms of the quarterly run rate of revenue, is 1,000 crores something which is sustainable for the coming next 3 to 4 quarters?
We've seen what we've got in the first quarter, and that's something which gives us an indication of what to expect for the future. While I wouldn't want to give a guidance in terms of specific numbers, what I can say is that we have got a very ambitious plan in place. We've got 4 strategic pillars, and each of these strategic pillars are firing well for us. And if anything, we would expect that to gain momentum as we go forward. Apart from and the transformation that has happened for us over the last couple of years, we have now moved to being an omni-channel retailer. And in the true sense of the word, we are one of the very few retailers who've got a very strong brick and mortar setup. And along with that, we have a growing, strong online channel in terms of shopperstop.com. And through these two mediums, we are able to reach our customers in a truly omni-channel way where they can choose to engage with us the way they want.
Sir, got the point. But don't you think that the sales of this is a lot more reflection of 2 years pent-up demand that came in together? So definitely such sort of demand, such sort of, is not sustainable. How are you factoring in that?
It's a fair point. And what we have seen in the last few months and right from March onwards, the numbers have been very strong. Both footfalls into store are at pre-COVID levels. The online eyeballs have been almost double or more than double to what we've had. And I think it's a number of things which are coming into play. The fact that weddings which had got postponed happened in the first quarter, return to work happened, and that obviously gave a boost. If we look forward, I think we expect the festive season to be very strong, and that always is a driver of retail sales, and that's something which we expect to be strong. So, and more so this year, you've got Diwali and Dussehra happening a month earlier effectively. This time, both of them fall into October, and hence you get a double dip effectively, where you get to engage with customers over the festive period in Diwali and Dussehra, and then on to the Christmas, New Year peak that comes through. So because of that, we expect the momentum and the uptick to sustain.
So, we can say that there was a pent-up demand, as we just said. There is an online channel. Some of the other tier 2 retailers would have got shut. That would also have an impact. But what this does to the balance sheet of the company? I was just looking at Q4. You were, in Q1, you ended with a net cash of 8 crores versus a net debt of 16 crores at the end of Q1. What does it do to the balance sheet at this point of time? What does it tell you about various stores that you operate in, where you need to expand, what it does? So what it does to the balance sheet and the outlook of the company?
Our net debt continues to be negative. So we have no debt. We are debt free. And that is a position that we always have been, except for a couple of quarters during the COVID period. Uh, Overall, what I must also add and emphasize is that we have gone back to the track of investments, and we have invested. We opened 6 new stores during the quarter. We are continuing to expand our digital investment both across the consumer facing channels, as well as upgrading the analytics and the engagement with the customer through content, and all of that we have been able to fund through internal accruals. So we have a fairly strong balance sheet, and that's something which we are delighted about.
Okay, Mr. Nair, we'll have to let it go at that note. Thank you so much for joining us. Hope to speak with you soon and understand better how the demand trends are shaping up in the 2 to 3 tier cities as well as what's happening with the margin outlook as well. But we'll let you go on that note for the day.